Welcome to Crypto Kid Podcast, here with another one today. So I have a special treat. I know I've been getting a lot of requests about getting into the meat of cryptocurrencies and the beefy side of it and how to handle assets and how loans work. So I have a very special guest, and I'll let him introduce yourself. Why don't you explain like how you got into the space and how you're innovating what this amazing technology is going to do for us in the future?
Yeah, happy to, Sunny. So my name is Mauricio. I'm originally from Venezuela, and I say that because that's where I learned what hyperinflation was, and that's where I found out what Bitcoin was. And very early on, myself and other Venezuelans started seeing solutions in Bitcoin, and that it would let us escape our sinking local currency in a time where it was very difficult to buy dollars. You could buy Bitcoin. And that was in many ways what allowed many of us to protect our savings, protect the value of all of our hard work. And mostly that was done through a combination of buying Bitcoin on spot or P2P markets, but mostly it was done through mining Bitcoin. And the experience I saw many times in Venezuela was somebody would discover Bitcoin, they would start mining it, they would earn a little bit of Bitcoin, they would get very excited, they wanted more Bitcoin, and they wanted to buy more mining equipment. But the only way back then to buy more mining equipment was to pay for it with Bitcoin. And when you did that, you lost the appreciation potential of that Bitcoin because the miners would take about a year to get delivered, and all the price appreciation between the time you paid and the time you got the miner basically was gone, and you no longer were the owner of that Bitcoin. So after doing this several times, we got very frustrated that we kept having to sell the Bitcoin. So we kept looking for options to get a dollar loan backed by the Bitcoin so that we could access the capital we needed without having to sell the Bitcoin. And nobody was doing that, to our great surprise. And after a couple of attempts of building mines here in Canada, my business partner and I looked at each other and said, if we solve this access to liquidity issue, we're going to help not just many people that want to mine, but also many Bitcoin businesses that may want to grow and not sell the Bitcoin. And many people are in the same boat. Once you find Bitcoin, you just want more. you don't really want to sell it. And so we had a set of expertise. He had been financing renewable energy for 10 years. I had been mining Bitcoin now at that point for about 3 years. So I knew how to sell the product and who needed it. He knew how to underwrite the loans and how to get the funding. So we came together and we created Ledn to solve our own problem. And then we started solving other people's problems, but that's the genesis of it.
All right. Yeah, so I saw in the news that eventually Bitcoin needs to be backed by something, and having assets like gold. This is what I saw in the news, that gold's going to be backed by Bitcoin, or Bitcoin's going to be backed by gold. I don't remember which one. So I thought that was really exciting. So did you explain you utilizing loans backed by Bitcoin a little bit, or?
Sure. So when the closest analogy would be that of a mortgage on a house. So when you want to buy a house, let's just say you buy a house, and for whatever reason you want to, we could look at it from the point of view that you want to buy a house and you want to buy a bigger house. So that would be our B2X product. So for example, let's just say you have a Bitcoin, but you want to use the purchasing power of that Bitcoin to buy more Bitcoin, which is a common use case for our clients. So let's just say you have $2,000 worth of Bitcoin, right? But you want more and you don't have the cash to do that, but you like the price that Bitcoin is trading at right now. So what you would do is you would come to Ledn, you would apply for a dollar loan backed by Bitcoin. So at Ledn, you can apply for a dollar loan that is worth 50% of the value of what you're placing as collateral. So if you have $2,000 worth of Bitcoin, you could borrow $1,000 from Ledn. So you would submit your loan application, you would post your $2,000 worth of Bitcoin as collateral, you would put in your bank account details or your USDC address if you want stable coins. And then once the application is approved, then you send your collateral to that address, you will receive the dollars to your bank account. You can then use those dollars to buy that extra Bitcoin that you wanted, or to pay for your expenses. Some people use our loans to pay for tuition, to buy more mining equipment, to pay for a pet surgery. So it's really a tool that helps you not sell the Bitcoin and get the liquidity you need. There's a few benefits of doing that. When you sell Bitcoin, typically you can create a taxable event. If you bought it at a lower price and you're selling it at now a higher price, you have to pay tax for that profit. But when you borrow against the Bitcoin instead of selling it, you don't create a taxable event because you're not selling the Bitcoin. You're just borrowing it from it. And this is a tool that wealthy people have utilized to not sell their assets, but to keep getting liquidity from their assets to buy even more assets. And so the utility of these products varies depending on what you want to do with it. But today we've helped thousands of people across the globe for things that range from buying another house. Some people buy houses, summer homes or places in Mexico. You can read the reviews. Some people have used it to pay for tuition, others to pay for an expense they had to cover in a pinch and they didn't want to sell the Bitcoin. But the uses vary, but the solution at the end is a mix of tax planning and getting liquidity without having to sell your most precious asset.
Okay. So what's the rate? What is, like, say if someone borrows 2,000, like you said earlier, what's the how do I say, how much money do they owe you when they get done paying off that loan?
Yes. So our interest rates are 12.9%, and that includes a 2% administrative fee plus a 10.9% interest rate. So if you borrow, just to keep things simple, if you borrow $1,000 at the end of the year or at the end of the term and you keep it for the full period, you will owe $1,129 will be the interest rate. So it'll be 12.9% times the amount that you borrowed. So that is the interest rate. And mind you, the admin fee gets charged once you set up the loan. And from then on, you start paying that 10.9% interest rate. That rate accrues only for the time you have the loan open. So if you only have the loan open for 45 days, you pay 45 days worth of interest plus your admin fee. And importantly, our loans, because we issue loans to people from so many places in the world, and our loans start at $500, our loans do not require the clients to make their monthly interest payments. All of the interest accrues on the loan until the time you want to repay. What does that mean? That means that if you take out a loan for $1,000, you're not going to have to be sending payments for $12 every month or $11 every month to pay for your interest. All of that money gets accrued to the outstanding amount. And once you repay, you get the Bitcoin collateral back.
All right. Now, does this stuff help out with your credit when you pay off the loan completely and on time?
So importantly, because we issue the loans based on the value of the Bitcoin and nothing else, a Ledn loan does not impact your credit score and does not ding your credit score, or it doesn't ding your credit score. It doesn't help your credit score. It's neutral when it comes to your credit history or your credit score. We do not ask you for a credit score to issue these loans.
Perfect. So that's exciting. So someone with low credit score could just go to a loan place that's backed by Bitcoin and get some help if they need to with student loans or anything. So we talked a little bit about interest rates and the fiat currency compared to those loans using Bitcoin collateral. Like, so I guess I'm saying, like, what do you use in collateral?
So and just make sure I get the question. We want to compare the interest rates on the traditional finance world versus the interest rates that we charge on the Bitcoin loan side. Of course. So there are different types of, if you look at the traditional finance analogs, right, you would have asset-backed lending, which would be, say, a mortgage, which is backed by a house. And then you have sort of unsecured credit on the other side of the spectrum, which is credit card debt. So to put traditional finance debt on a bit of a spectrum, you go from a mortgage rate right now is sitting in the sort of mid to high sevens. So, you're looking at about 7 to 8% in terms of a mortgage, which is an asset back subsidized by the government and that has many protections that are issued by the government. So that rate is lower than market for many reasons. But let's just say it's 7 to 8% for a mortgage. And then if you go to the credit card spectrum, you're looking at about 30 to 40% at times, depending on where the interest rates are. So right now, the Fed funds rate is at 550. So the credit card debt is somewhere around the 28 to 32 range. So in the traditional finance world, you have a spectrum of about 7 to 8 to say 32. That's depending on the quality of the credit history or the score, et cetera, or the asset that's backing the loan. In our Bitcoin backed loan world, we issue our loans at 12.9%. So you can see that they are slightly higher than that cost of a mortgage, but well below that of a credit card. And so the benefit there, and again, the reason we charge that rate has largely to do with the cost of our capital to fund those loans. So we have to get those dollars from somewhere to lend them to you. And to entice up that part of the business to lend us dollars, we have to pay them a rate of 9%. That's the rate that we pay today on our digital dollars. So we pay 9, we charge 12.9. The difference is how we make money to operate and keep the lights on. But that's a bit of a comparison between our rates and that of the traditional finance world. So we are slightly higher than a mortgage, much lower than a credit card.
So like in between. So that's good. That's pretty neat. I'm glad you guys are pushing forward and getting involved with the banking industry and being a serious competitor for real. Now, what are the potential advantages and disadvantages or opportunities and risk associated with Bitcoin-backed loans?
It's a great question. So in terms of advantages, let's do advantages first. Advantages is that you can get liquidity without needing to sell your Bitcoin. That means that without having to go into an exchange and sell the Bitcoin, Ledn disperses loans typically within 24 to 48 hours of approval. So on a very quick turnaround, you can have the cash you need without having to sell the Bitcoin. And that the secondary benefit of that is that you prevent having to go through what's a taxable event or what could be a taxable event. By borrowing it from it, you don't trigger any taxes owed because you're not selling the Bitcoin. Therefore, there's a tax advantage too, depending on your jurisdiction and where you bought the Bitcoin at. So that's also another benefit. The third benefit is that you don't need to have a credit score, right? Mm-hmm. Like you don't need to have a good credit score or bad credit score. All you need to have is the Bitcoin and to pass the KYC and AML checks at Ledn, right? And so with that, you can opt into this loan. And this is a material accessibility issue for people in places that have credit score systems and that are somehow, shun out of the traditional credit markets. But it's also very important in places like Venezuela, where I'm from, where there is no credit score. So many places around the world have no credit scores. And so for them, it is very, very difficult to get any loans from a bank. Like only loans in banks from like Houston to Patagonia, like in Latin America, you only get a loan if you're a very wealthy person that doesn't need a loan. The people that do need a loan have like so many challenges accessing this. And this is why we see so many people from Latin America use our services, because we can A, accept their application, B, process it in record time, and C, disperse the funds even on a weekend. If they want to get stable coins, we can get them those stable coins. And the other thing in LATAM is that there is very limited access to digital banking. No banks don't have apps, and the ones that do, the apps suck. And and there are no banks in very remote areas. So like there are parts of Venezuela where you won't find a bank in like 200 square kilometers, right? And so you have to that idea of going to a bank to apply for a loan or doing it from your app doesn't really exist in a lot of Latin America. So they find solutions in entities like us that can provide those services.
Even here in the United States, it can be kind of tedious and annoying, all this paperwork, and then you'll maybe get approved. Like especially people that are starting their own business, they need help. And
yes,
and it's easier to get a student loan than it is to get a business loan. And I just find that quite frustrating. It's just like people are trying to do better for themselves, and they need an easier outlet to get money that they need to be able to grow.
100%. And that's something that happens often with the Bitcoin community, because a lot of the Bitcoin community is self-employed. And when you're self-employed, whether you're a contractor or you work in the gig economy, or you're a bug bounty hunter, you don't have like a steady stream of incomes from a W-2 or a T4. And that's what the bank wants to lend against. You could have all the assets in the world, But if you don't have that W-2 or that T4 in Canada, it'll be very, very hard for them to lend to you, because it's not about, to the bank in many cases, it's not about you having the asset. They don't really care about the asset. They care about your income stream. And with Ledn, it's a bit of a different model, because we care only about the asset. Though the income stream is for us, we have the asset that we're lending you cash against. And if there's any sort of event of impayment, or you do not meet your side of the deal, we have the collateral that we can go and sell. So I shouldn't need to qualify you for anything else other than your ability or my ability to sell that collateral if you don't meet your side of the deal. And we touched on the benefits, but I do want to touch on the potential risks that people need to be aware when looking at these kinds of products, because that's something that Ledn does. We have a reputation for being the best risk managers in this industry, or the longest standing lender, and there's a reason for that. It's because we care deeply about A, our clients, and B, them really understanding what are the limitations of these products, what are the benefits and the limitations, and so that they can plan accordingly. So for example, because we only borrow based on the value of your Bitcoin, and Bitcoin prices can vary, our system monitors the value of the amount we have outstanding relative to the value of the Bitcoin collateral that you've placed with us. In the situation where we lend you, say, $1,000, and you place $2,000 worth of collateral at the time, but Bitcoin price starts dropping such that the value of the collateral has now become $1,400 versus the $1,000 we lent you. Once that limit starts getting close, we start having to send you notifications so that you send us additional collateral. Why? Because if the value of the money that we lent, the outstanding amount, becomes 80% of the value of the collateral that you've placed with us, our system has to automatically sell the Bitcoin collateral needed to settle that debt and close the loan. And any remaining amount after settling the debt gets sent back to your account so you can withdraw it. But that is a limitation that the product has. And to us, if you can plan around it, our clients plan and they send us the additional Bitcoin when the loan needs it, and they're able to keep it on a healthy status. Then they repay the dollar loans, then they get back all of that Bitcoin. But those who don't plan accordingly could be caught in a situation where Ledn has to make a sale and their loan has to get closed. And we want our clients to walk out with more Bitcoin than they came into Ledn with, not less. So we want you to plan accordingly and understand that that's how the product works. These are the rules we have to abide by to keep this business in a sustainable way and operate this business in a responsible way. We have seen now what happens when you don't do that. And so we're, I believe, the only ones, or one of the few at least, that can still be here today and tell you, why this is so important. So it's something we take very, very seriously. And I just want to share because I want people to use this and come out with a great experience.
Well, I'm sure they will. And it's not, once this industry becomes mainstream, a lot more people will be becoming more curious. Right now it's kind of a bad time because it's a down market. And so how are you guys dealing with the fluctuation with the markets?
So at Ledn, this isn't our first rodeo. We turned 5 last week. We turned 5 years old. So we've seen the sort of ICO boom and bust. We've seen the DeFi boom and bust, the NFT boom and bust. We've seen firms like 3 Arrows blow up, and Celsius blow up, and BlockFi and all the others, and FTX and Alameda. And we've been through cycles. And I've personally been in Bitcoin since 2015. So I've been through the cycles. And what ends up happening in these bear markets is that the way I like to describe it is like, you can think of Bitcoin as a almost think of Bitcoin like a theme park, okay? And every time this theme park has a set number of residents, people that live in the theme park and they love being here and they're not going anywhere because they just love being here. Every so often, something really cool happens at the theme park and like hundreds and thousands of tourists show up, okay? And all of a sudden, the excitement goes away after a year or two, and those tourists, start exiting the park. But a small number of them stays, and the base of residents becomes larger. Mm-hmm. And so every time there's a tourist cycle, and they come and they leave more permanent residents, if that makes sense. So, the number of permanent residents from the 2015 cycle was this amount. On the 2017 cycle, it became this amount. On the 2020 cycle, it became this amount. And you've gone from no corporations to only Tesla, to only Tesla and MicroStrategy and PayPal and Block, and and so on and so forth. And now you've gone from, in the 2017 cycle, we didn't have an institutional product. In the 2020 cycle, we had a futures-based ETF. Mm-hmm. And now we're about to see a spot Bitcoin ETF approved through none other than BlackRock. Yeah. So I believe that we're just getting set up for yet another wave. And each time people come to the theme park, it's more and more people coming to the theme park, and more of the bigger dogs coming to the theme park. In 2017, you would be caught dead before you heard a bank exec talk about Bitcoin. It's 2023, and you have Carlyle Group and BlackRock talking about Bitcoin on CNBC, mm-hmm. almost on a daily basis. So I think the proof is in the pudding, right? Like I still remember when I started seeing the CNNs of the world start mentioning Facebook and social media, and start covering social media in the newsroom, in the news feed. And at first it felt wonky and it felt weird. But now you have Canadian media up in a hissy fit because Facebook won't run their news. So it's crazy how fast all of this changes. And for us that we're in it, we kind of see every change, every minuscule change as we magnify it. But to somebody that's perhaps not paying as close attention, they'll forget about it, and then they'll look back at it and they'll see, whoa, when did BlackRock get involved? When did El Salvador made it a legal currency? Like, when did all of this stuff happen? And we're in it, so we get to see it every day. But we're making strides almost on a daily basis, and it's hard to notice because this industry moves so fast. But to an outsider that checked out for a couple of years and came back, they're going to come back and say, whoa, this looks like a real industry now. Before, it was younger kids it felt more like a novelty or a toy. But now when you have the sort of behemoths squarely in the room, you can't sort of deny it.
Exactly. Yeah, you old timers, you better get ready for change. I know you hate it, but the new wave, the new generation's coming. And it's very encouraging to see how yourself is very experienced and seasoned in these kinds of things, and you explain things so well. And it's so true what you said about BlackRock. It's a game changer, man. It is, because BlackRock, they own a lot of shares in different companies like Google, Facebook, and a bunch of other ones. So many, just so many. And this is like, it's all coming to fruition. You know what I mean? It's all coming alive. And it's just like, wow, my parents, my friends are like, why don't you get out of it? It doesn't mean anything. No, it's not, because I'm not full of shit. And now you guys are seeing it actually happening. And I was like, whoa, we should listen to you. And like, whenever someone asks my friends about, what do you think about Bitcoin? What do you think about cryptocurrency? They're like, you got to ask Sonny. Sonny's the one who knows, because I've been doing podcasts since like 2016, 2017. And I've known about Bitcoin since like 2013, 2014, around that era. And yeah, for sure, man. Thanks, dude. Thank you for saying all that, because it's validating for me. Now, what are the innovative approaches or novel products emerging for home loans and contents for cryptocurrencies?
It's a great question. So in terms of home loans, and what was the other part that you mentioned? Home loans and what?
Home loans and the contents of cryptocurrencies are the innovative approach or novel products emerging.
So sure, happy to chat about novel products. So I'll speak selfishly about the products that we've launched because I'll speak about our most recent releases, and then I'll talk about maybe a few that I think are very interesting that are out in the market. So one of them is, to your point about home loans. So we launched a product in 2021 called the Bitcoin Mortgage. And that product is meant to use your Bitcoin as collateral to help you buy a property and use that property along with the Bitcoin as collateral for your loan. And that is a product that it's only live in Ontario, Canada today. And it's a product that has received a tremendous amount of interest. And I do think that once interest rates get normalized again, right now the housing market is under a lot of pressure, where interest rates are, et cetera. And Bitcoin, transparently has come from 70 to 30. So anybody that wanted to buy a house at 70 has to kind of adjust their purchase plans at the new 30 price. So I do think that this is a product that is going to eventually, in my view, is going to become the standard way of buying a house, because you're going to want to have a house and a bit of Bitcoin as collateral for that loan. And having the Bitcoin and the house as collateral is going to actually help you get a lower rate. This is my personal view. In the long enough future, you're going to be able to get a lower rate by combining those two collaterals than by borrowing against the house only. Why? Because Bitcoin is much better collateral to lend against. It's easier to sell. It's easier to move. It's easier to do a lot of things with it. So that's a pretty innovative product. The other one is called a dual cryptocurrency note. And this is a product that, let's say, for example, you bought Bitcoin at $10,000 and you would be a happy seller of that Bitcoin at $35,000. And you would want to do that because you have some debt that's coming up, at the end of September. So at Ledn, you can come and say, I want to basically pre-plan a potential sale of Bitcoin. And I would like to sell my Bitcoin at 35K at the end of September. So you're going to get into this note, and by locking up your Bitcoin to potentially be sold at 35K at the end of September, for you taking that commitment, Ledn will pay you a yield. And that yield will be higher than what you can earn in the standard savings or growth account. So for example, let's just for argument's sake, say that you can earn a 3% term yield for those 2 months, right? You would earn 3.03 BTC on your BTC for entering into this a DCN or dual cryptocurrency note. Fast forward till the end of September. If at the end of September, at the time of maturity of your DCN, if the price of Bitcoin is at 35K or higher, you, instead of getting a Bitcoin back, you get 35K, because that's the price you wanted to sell it at and on the date you wanted to sell it at. And now you get your 35K plus the 0.02 Bitcoin that you generated for participating in this DCN. That holds true even if Bitcoin is trading at 37 or 38. You're still going to get 35 back. That's why you're getting the yield, and that's basically where the yield comes from. It's from that variability that it may be at your level or higher. And so that is where the yield comes from. Once you have the 35K, you can do the same to buy Bitcoin. So for example, say you're a happy buyer of Bitcoin at 25K again at the end of October. So you set up another DCN for your dollars. So that is a product that allows you to get the most out of your Bitcoin and your dollars, and even stay on track with your purchase or sale plan as you would. So there's a little bit of nuance in the product. I welcome people to check out some of our content in our videos to better understand it. But in a nutshell, it helps you get a higher interest rate on a transaction that you may have been planning to do already. That I think is a very interesting new product. And then the other ones that I'm personally very, very excited about are, generally speaking, just stablecoins. I think stablecoins are a massive innovation, especially for the rest of the world. Somebody in the United States may not appreciate how revolutionary a stablecoin can be, but speaking from somebody that grew up in Venezuela, it's very difficult for the average Venezuelan to have a bank account that can accept dollars through a wire, or that can send dollars through an online method. Most people in Venezuela cannot afford to leave the country. And if you cannot do that, and not only that, but you don't have a visa to enter into the US or a visa to enter into anywhere you need to go to. And then when you get there, you may not have the paperwork necessary to open that local bank account. So the only option for a humble Venezuelan, is to hold that cash to protect themselves from bolívares in cash dollars. And having cash dollars in a country like Venezuela is a big liability. I've seen people get their little cash savings taken from them at a military checkpoint. They got stopped by a corrupt military guy, and they saw the dollars, and they said, you're not allowed to have dollars in Venezuela. These are mine, and it's a big liability to have that. Not only that, but when you have cash on you, you can't make a payment for any service. You can't pay Amazon to bring anything you need. You can't earn interest on anything on that cash. But when you have a stable coin, you can deposit it at Ledn and earn 9%. Or you can use it to pay a supplier in China and import a good that you can then start a business with. It is the fact that stable coins can connect the world to the dollar economy and enable cross-border payments is, to me, a massive improvement to humanity as a whole.
Absolutely. And I do believe that PayPal came out with a stable coin too. So exactly. And going back to your point about Venezuelans coming to the United States, yeah, they could do have all the paperwork ready, and they still might not get accepted to enter. They could get, the visa could get denied. So
100%.
I feel that. And how can you merge calls and the process of liquidation being effectively managed within framework of Bitcoin collateralization loans?
So I think that question kind of speaks to how Ledn makes sure that we are able to protect the business in the event of a big crash in Bitcoin prices. And how do we ensure that we're going to be able to sell the necessary amounts of Bitcoin to close the loans as they should. And the way we do this is each one of our loans has an individual algorithm that governs the loan, and every minute it gets updated with the current market price of Bitcoin, current outstanding amount, and then it calculates what's called a loan to value relationship. So based on the amount that is outstanding and the market value of the collateral, if you divide this outstanding amount over the value of the collateral, you're going to get an output. And that output starts at 50%. Our loans start at, we lend you 50% of the value of the collateral. As the price of Bitcoin drops, that ratio will increase. So it'll go from 50 to 60, from 60 to 70. When our algorithms detects that any loan has reached the 70% threshold, you start getting notices as a client and letting you know that you need to top up and send additional collateral to your loan before the LTV reaches 80%. If the price keeps dropping and the LTV reaches 75%, you get another notification. And then eventually, if the LTV reaches 80% at any point, the system must automatically close the loan and sell the Bitcoin that it needs to return the Bitcoin back to the client. A couple of things there. We have done this. This has happened, in several cycles. We have closed thousands of loans. We haven't lost a penny or a Satoshi. Ledn has issued over $600 million worth of these loans to date, and we haven't lost a Satoshi or a penny in our retail Bitcoin-backed loan book. So we're very confident that this system is very battle tested, and we're also have had to sell Bitcoin in the darkest hours of the markets, right? So think back to the COVID crash when everything was crashing. If you needed to go out and liquidate millions of dollars worth of Bitcoin in that environment, you could do it, no problem. And that has held true for Bitcoin. That has held true also for Ethereum so far, even though we don't have Ethereum-backed loans, so we don't support ETH on the platform today. But we've been monitoring how all of the other assets in the crypto universe have behaved during these downturns to see and determine if any other asset would be suitable as collateral for the platform. So Bitcoin has incredible attributes that make it the world's best collateral, in my opinion. And there are other assets in the crypto space that I believe are also a good form of collateral. Ethereum could be an example. In the case of stablecoins, they don't really form a great collateral for a loan because they are the units that the loan is many times issued in. So stablecoins are great for payments, and they're great for using them as you would your standard dollars. But you don't necessarily put dollars as collateral for a loan, right? You use dollars as the unit to borrow, and your harder assets that that have the appreciation potential over time is what you would want to post as collateral. So it's all programmatic, I guess, is the long and the short of our Bitcoin-backed loans.
That's very impressive. That's very impressive. So what is the significance of stablecoin, and what is its current direction of the market trends related to stablecoins?
Yeah, it's a great question. So in terms of the significance, I think I briefly touched on this in the previous answer, but the significance of stablecoins, in my humble opinion, is that if you look, if you go to a place like Venezuela back when I was there, or even like a place like Argentina today, and you ask them, what would you like to get paid in? 99% of people will answer US dollars. And that is for a multitude of reasons. But the primary one is the US dollar has an excellent brand as a currency that could hold its value better than any other LATAM currency. And you can make an experiment yourself. Try to travel to somewhere in Asia and take $1 and €1 and ask somebody what they prefer. And even given the option of holding euros versus dollars, they will do dollars, like 9 times out of 10. Why? Because most suppliers can be paid in dollars. Most of your debt, if you offer to pay anyone else with dollars, they are likely to accept it. So this is a benefit for several reasons. For somebody sitting in the United States or Canada or Europe, the idea that now somebody has access to a digital US dollar may not sound as revolutionary, because you are used to things like Venmo and PayPal. And for you, it's always been easy to move and send dollars around the world. There's never been any challenges. I'll give you an example. This is well before stablecoins. Myself or my family and others had a bank account in Panama, a US dollar bank account in Panama, because that was one of the few places where you could easily open a US dollar account as a Venezuelan. And my aunt had to get a surgery done at the Mayo Clinic. And we asked to wire money from our family's bank account in Panama to the Mayo Clinic to pay for the surgery. They asked us for copies of the invoice. They asked us for confirmation that the surgery was real. It took us weeks to get the money out. And it was our money. We were trying to send it to a hospital. And it took us weeks to get that done.
That could have been very bad if the situation was worse.
It could have been a horrible outcome. And that would not happen with stablecoins. If we had had that money in stablecoins and we had to send the payment to anyone in the US, we would have been able to do that through stablecoins. The caveat there is that the clinic or anyone that we were sending the payment to may not have been set up to receive that payment. But any one of our relatives that was in the US, we could have sent the stablecoins to them. They could have easily gone to a place like Coinbase, converted the dollars, things are paid. So stablecoins, or the access to digital dollars, permissionless digital dollars for 8 billion people in the globe, for me, is something that should have always been a human right. But it hasn't been deemed as a human right yet. I think the popularity of stablecoins today screams at the world that the world needs this tool. And you're just not going to be able to stop it. And that's why I think you're seeing governments move to regulate them, because they are appreciating that you cannot put the cat you can't put the cat back in the bag again. People know that these things exist. They're going to want more of them, and you need to make them better and faster. If you don't do them, someone else will, and they're going to that's going to take off. So it creates this sort of competitive game theoretic dynamic that almost forces you to have to create a great product. And I think that holds true also for national currencies, because now that people have the option to opt into a US dollar stablecoin or opt into a Bitcoin, it puts the pressure back on central banks to create a currency that people do want to hold. Because if they don't do that, no one will. And you're just going to have inflation everywhere until they get their act together. So I think, digital assets, both stablecoins and Bitcoin, work to put a check and a balance on central banks and to make sure that they have limits to how poorly they can manage their finances.
That's true. That's true. And I believe the feds here in the United States are looking into digital asset, and it's going to become really real. It's like what I like to say is this sleeping giant. I believe China is looking into it also, and there's really no stopping it. And that's a very compelling story, man. Is your family member okay now, or?
That this particular relative has unfortunately since passed. But when we were able to get the surgery done at the time, and so it in that particular instance, it had a, we were successful in making the payment. She lived a long and happy life. So we're happy that we were able to get that done. But it did illuminate that when you don't have a bearer asset, you're many times at the mercy of the middleman, right? And that stuff is great, but it's great to have access to the service, but you have to realize that if it's not a bearer asset, you may not have the outcome that you want in that particular situation. And because we were Venezuelans, and the government of Venezuela was doing a lot of bad things. Yeah. And naturally, the United States moved to sanction all these bad guys. And a country doesn't matter what the country is, Russia is not full of Putin supporters. Not every single person in Russia is a bad person that supports Putin. Not every single person in Venezuela is a bad person that supports Maduro. Not every single person in Cuba is a bad person that supports the Castros. So what happens when you throw out these blanket sanctions is that you can try to make them as targeted as you want, but when it comes to financial entities having to abide by those sanctions, they're going to opt for the path of least risk or the path of least resistance. And oftentimes that means shutting down that country altogether from their services. Yeah. And that's an unfortunate reality of regulation as it exists today. But that's something that I think Bitcoin and digital assets are going to change.
My heart goes out to people that suffer when those type of things happen, because they literally have nothing and they're just fighting to survive, So I'm glad that you're taking the initiative to get people out of positions they're at and access to their money, and like you said, taking out the middleman. Do you want my analogy is my opinion is how the United States is going to get into a digital asset is, I think the economy is going to have to collapse first here in the United States. And that would give the government an excuse to go on the digital currency. That's just my opinion. Who knows? I mean, I might be right, I might be wrong, but so what do you think about that? Do you think that that's a pretty good view of looking at things, or am I wrong?
So I mean, no one's right or wrong in these things. These are projections, right? Like we can this. No one knows how this thing is going to really play out. So you may turn out to be absolutely correct. My thinking on how this whole thing kind of comes together is, so a country like the United States has an incentive for stable coins to proliferate and has an incentive for Bitcoin to proliferate, and I'll explain. I try to divide the world into the places where capital wants to be and the places where capital is forced to be. And the way you can sort of determine where that line is drawn is, you're in the United States. You see where a lot of the international students are coming from, right? And they're coming from all over the world. So what ends up happening is that and an analogy I like to say is wherever people send their kids is where they want to send their money. And if the kids and their money aren't in the same place, it's not because they don't want to, it's because they haven't been able to do so immediately, and they've had some artificial restrictions that don't allow them to do that. But it's where the water wants to flow, if you would. Like you could try to hold it with the dam, you can try to hold it with a bunch of stuff, but eventually all that stuff overflows and the water gets to where gravity is taking it. Mm-hmm. So the way I see the world in some ways is, if you look at where the wealthiest of the Chinese are sending their kids to school, the United States and Canada. If you look at where the wealthiest Russians are sending their kids to school, the United States and Canada. If you look at where Africa is moving to, well, Europe, right? If you look at where all LATAM wants to immigrate, it's North America. So largely speaking, if you're an entrepreneur in any one of these countries, from Brazil to China, and you get a large windfall payment and you're successful, the first thing you're going to do is send that money to the US somehow, to buy a house, to invest it in the stock market, to buy bonds, to do something with it. But it won't stay in your local country, right? And the reason it won't want to stay is because you as a person in those countries do not trust that government and the institutions that are supposed to be keeping that country on the rails, right? And that holds true for most of LATAM, and I would argue for most of the world outside of the people that live in the United States or in parts of Europe, which they feel like you're in the central hub of the world and there's really no better home for your assets, right? But everyone else is trying to get their savings and their value of their assets to that place where they feel warm and fuzzy. Mm-hmm. And they are prevented from doing so by artificial controls, so like capital controls. So in China, there are strict limits to how many US dollars you can buy as a natural person each year. And you cannot buy more than the dollars that the government says you can buy. And that holds true in Venezuela, Cuba, Argentina, etc. So you're holding back people from doing what they really want to do with their money. And what you used to do, the people you used to send to do that dirty work to enforce that were the banks, because they would tell the banks, don't sell these people dollars. It's not allowed to buy and sell dollars. They won't even send dollars to the banks to sell to the people, right? Mm-hmm. But with Bitcoin and stable coins, you create P2P markets that make those controls, those inhumane controls, much, much harder to enforce on society. So people go and they get rid of their local stuff for stable coins, and they get rid of their local stuff for Bitcoin. And guess where they take that Bitcoin? They will likely deposit it at a place like Ledn, because they feel much safer, because we were founded in Canada, we're regulated in the Cayman Islands, and we've been doing this for 5 years, and they feel like we are going to protect their assets better than any local institution will. And when they do this, they eject themselves from that local mess, right? But at the same time, they have exchanged their local currency back for it. They've pushed it back into the economy. They've taken out stable coins, and they've opted out of the system. And every time a person does that, it keeps making things harder for the local government to keep inflation down and to keep things. And what that does is that starts creating democratic pressure for those irresponsible cronies to get voted out.
Yeah, that's how revolution happens.
And what we are trying to do here, and this is why in many ways I do think Bitcoin is a peaceful revolution. It is a peaceful revolution because it takes power away from your central bank, and you can use that as leverage to get them to do the right thing, and if they don't, get them out of office.
Mm-hmm. So are you basically saying the more people that get involved with digital assets, the government will be forced to comply with what the people want?
Bang on.
Thank you. That's true, man. So if you're in like situation and you believe that your voice doesn't have an impact, it really does. You should definitely make a move to better yourself and live your own life, for sure. What are the valuable insights did you gain from experience hyperinflation, and what strategies can you recommend for safeguarding assets in such turbulent economic environments?
That's a good question.
Mhm.
In terms of insights, well, this was true back in Venezuela, and I hope it doesn't come to fruition in many more places. But one thing that was true then, and I think will hold true if and when this happens again, is that the government will never tell you that things are hyperinflating. like no central bank is gonna go on and be like, oh yeah, no, it's hyperinflating, but we're gonna keep printing and don't worry about it, it's gonna be fine. What happened back in Venezuela when hyperinflation started is the central bank stops printing or sharing data. The Venezuelan central bank went for 2 full years without sharing any data on the size of the money supply, on the size of loans, on the size of anything. The central bank just went fully dark. And so, and the other thing is, in Venezuela, it became very evident that all of the metrics that they were publishing were heavily manipulated. They would publish inflation. They would publish an inflation calculation that God knows how they did it, but everybody knew that was not what was happening in reality. So the first reaction, or the first insight would be, find your own way to calculate inflation. What do I mean by that? Track the price of coffee at your favorite coffee shop. Track the price of a sandwich at that same place. Track the price of going to the movies in your favorite place. Track the price you're paying for your online services like Netflix or others. You can create your own inflation basket that will track your day-to-day inflation much better than this so-called CPI, or consumer price index, basket of goods that they try to shove down our throats. And that gets arbitrarily changed. The components get arbitrarily changed to get to the number that they arbitrarily pick. So create your own measure to see your changes in your own day-to-day reality. Don't trust that some other basket, that somebody with an incentive to make a number look a particular level is going to not use, it's going to somehow operate in an unbiased manner and not try to get the number to a place where it makes them look like they're doing a good job. So be skeptical about the real rate of inflation. My dad always used to say to me that no matter what they tell you, inflation is always 10%. So to me, that was always a good way of thinking. And it may go off here and there, the 10%, but it's actually a pretty good heuristic. The other one was, the other sort of insight from that was, don't save in your local currency. Like, if you don't trust where inflation is headed, opt out of it. Get yourself some gold, get yourself some Bitcoin. Like, if you don't understand Bitcoin, get yourself some gold. If you're comfortable holding Bitcoin, get yourself some Bitcoin. There are, again, if you're an American person that is very skeptical on the US dollar, probably you're going to be equally skeptical of any other currency. So you probably want to go to gold or Bitcoin or something along those lines. If you're a person in a non-dollar country and you're skeptical about your own currency, you probably want to go to the dollar and some Bitcoin, because that's just what you're comfortable with. But hedge, I guess, is the right answer. What I'm trying to say is the other insight is, don't just sit there. Hedge the value of your assets, and try to transport those assets into a currency or asset that won't be inflating as badly as what you think your local currency is doing. And the other one, I think those would be the sort of the two main ones in terms of, and the last one is, this is sort of again, I hope nobody goes down this path the way we had to, but have a second passport. If you don't have a second passport yet, and you don't like where things are going where you are locally, chances are you may need to move in a long or short enough time frame. So try to get the passport while your country is still not sanctioned. Because once your country starts getting a brand for being the guys that are doing things, they're hyperinflationary country, nobody wants you as an immigrant at that point. So if you think things are going to burn, you try to get out of that house. Try to be one of the first people out of that house.
For sure. I'm glad you brought that up. In the face of lending crisis in 2022, how did Ledn manage to navigate the situation and ensure its survival? What were the key factors that contributed to this outcome?
Well, it's a great question. So I think the main factors that helped Ledn navigate this in a way that no other firm was able to do, I think, are a few. Number one is we did the things we said we would do, which is we managed risk in the way that we said we would. We kept a very simple operation, meaning if you lend us dollars to earn interest, we lend that same unit $1 at a higher interest rate, and we sit in the middle and we collect the spread. And the same thing goes for Bitcoin. We work with the deepest or most liquid assets in the industry, Bitcoin and USDC. What does that mean? It means that we never dealt with exotic assets and had to generate interest on these exotic assets for clients. When you are needing to generate interest on exotic assets, there's only a few things you can do. One, you can swap that exotic asset into one that has institutional demand. And so you can lend that, but then you create an asset and liability mismatch because you owe your clients one asset and you're lending a different one. And if the price of these two move and you did not cover that properly, you then may not have enough dollars or Bitcoin to buy back the assets you owe the clients. And that puts you into an insolvency issue. The other thing other groups did is at Ledn, for example, if you lend us money that you can withdraw at any time, we are going to lend that money to someone that allows us to withdraw it at any time also. Because if you don't do that, then you have what's called a term mismatch. And what some firms were doing is they were taking deposits that could be withdrawn at any time, and they were taking that money and financing Bitcoin mining projects that had 5 or 6 payback years. And lo and behold, if people showed up before 5 or 6 years to get their money back, you cannot turn around and sell a mining operation to give people their money. So you had asset liability mismatch, you had maturity or term mismatch, and then the biggest one that is the sort of the one of the biggest common traits around all these guys was they all printed their own token. And when you print your own token, there's two things that happen. One, you can print your own money. And so it removes this pressure of precision and having to navigate or manage the business to a bottom line. If you don't make enough that month, you just print more tokens. If you want to get your name on a stadium, you just print more tokens and give them to people. And that creates a culture of excesses. Not only that, but it opens up massive regulatory risk because you may be selling a security. And in many cases, that's what's been determined. And so those were all big pitfalls. And I guess one of the biggest ones was that none of the now defunct lenders did proof of reserves. And Ledn has been doing proof of reserves since 2020. We're now on our 3rd year. We do them every 6 months. And what does that mean? That means we have an accountant that comes into Ledn, checks what we owe our clients, checks what we have in our lending partners, in our custody, in our banks, in our exchanges, and ensures that we have enough assets to meet or surpass what we owe to our clients. And that report gets published and every one of our clients can see it. We have that and a couple of other features, but I think it was a mix of the simplicity of our business, the strict and sort of inexorable abidance to our risk management policies, and making sure that we're always doing working with the best and most liquid assets so that we don't get into a situation where we have to deal with an illiquid asset.
I like how you guys are very transparent with yourselves and just like, if I feel like like if you feel like something's gonna work, you do it, and if it's not, you do some risk management. You know what I mean? You have to put some second thought, like maybe that might not be a very good idea. So let's hold back on that decision. So, what exciting developments do you foresee in the realm of crypto lending as we look financial landscape?
What's gonna come down the pipes in the lending world that I'm very excited about. So I've said this a few times before, and this is sort of my bullish call. which is that I believe that borrowing against your Bitcoin will be cheaper, faster, and more efficient than borrowing against US real estate. And that's going to happen in a very short order. To give you some sense, when we started lending dollars backed by Bitcoin, our loans were issued at 18%. And today, those same loans are issued at 12.9%. And that 12.9 has actually come up because of the Fed has increased interest rates dramatically. But we were, when rates were back at zero, our loans were going out at 8.9%. And so that means we've come from 18 to, now high single digits. We've kind of halved the cost of borrowing in over 5 years that Ledn's been around. I think in the next 5 years, you're going to see that halved again. And eventually you're going to see borrowing against your Bitcoin as a faster way to get dollars, a cheaper way to get dollars versus a mortgage or a home equity line of credit. And there's a huge distinction there. Only a select portion of the world can borrow against US real estate, because only a select part of the world has access to US real estate. But the whole globe can access Bitcoin. So that means you're going to enable mid to low single digit access to dollar liquidity to the planet, which to me is a massive game changer, because the whole world operates on credit. And only a small part of the world has access to high quality credit at the right rates. But when you change that through Bitcoin, you're going to open up opportunities to people that may have never even considered that they could do certain things. So, you're going to see the cost of financing drop significantly around the globe. And I think that's just going to even out the playing field. So I'm not necessarily excited by a particular product in the lending ecosystem. I am excited about this industry maturing and having the capital it needs to go out and surpass the US real estate lending market, because I think we can do that.
Oh, it's going to happen. It's inevitable. It's going to happen for sure. Could you provide some details about Ledn's new offerings, specifically digital credit notes, in other words, or in abbreviation DCNS, and the growth accounts? How do these products stand out and cater to the needs of users in the crypto space?
Great question. So that touches on our two most recent products. So I'll break the answer up in a part for each. So one, let's talk first about the growth accounts. So what the growth accounts are, they are the evolution of our savings account, or in other words, the evolution of our yield offering for both Bitcoin and USDC. And the big distinction in that product and why it's so important, it's because it now ring fences the risk of the growth account activity to the people that choose to participate in that growth account. And what does that mean? It means that if you are a Ledn client today and you choose to participate in the growth account, you're gonna transfer your assets from your transaction account to your growth account at Ledn. And once you do that, once the assets are in the growth account, your assets are only exposed to the benefits and risks of the loans to institutions that are issued from that pool of assets. So why that's so important is because previously in the defunct companies, you could be a client that was there to do a Bitcoin-backed loan, okay? And you wanted to place your Bitcoin as collateral and get dollars back. And that collateral was not earning interest. Therefore, you are none the wiser that your collateral is at risk because of that same company's lending activities to generate yield, right? And what ended up happening is the guys that had collateral for their loans had their assets trapped in the bankruptcy proceeding in the same way than the guys that were earning yield, even though the guys that were in the loan hadn't willingly opted in to participate in that yield operation or in the risks of that yield operation. So what the growth account does is that it now ring fences the benefits and the risks to the people that choose to participate in the account. So I'll give you an example. Let's just say that you are a Ledn client that has Bitcoin in your transaction account. And there is, we have a bunch of clients in the growth account, and we've issued loans to 10 institutions, and each institution has, say, 10% of the pool of assets. And let's just assume that one of those institutions cannot pay their loans back. Okay. At that point, what happens is the growth account clients have 10% of their assets, the loan that could not get repaid. That balance or that percentage gets frozen and goes into what's called a recovery pool, where Ledn will liaise with the borrower and get through the bankruptcy proceeding to recover as much as possible and to give the money back to the clients. However, the 90% of the balance in that account that was not impaired is still available for withdrawal. Why that's important is because in a lot of these now defunct lenders, they had one or two loans go sour, and because the risks were not ring-fenced to the lending operation, it brought the entire company down. So now the people that are in the growth accounts don't have to worry about Ledn bankruptcy risk, because they are only facing the loans that are issued out of that entity and that pool. Conversely, the people in the not in the growth account don't have to worry about any one of those loans that have been issued to those institutions out of the growth account pool going sour, or an institution not being able to repay that loan will or should not impact your ability to use other Ledn services, if that makes sense. So we're basically ring fencing the risks from the yield and the lending operations of the growth account to the people that are participating in the growth account. So what that does is that creates, I believe, a much better experience for everybody, for the clients, for our partners, for Ledn.
Okay.
And then DCNs, sorry.
Yeah, go for it.
So DCNs is a product that allows you to plan a potential future sale of Bitcoin or purchase of Bitcoin at a day in the future that you want, at a price in the future that you want. And by committing to that potential sale, you're going to earn a yield for locking into that commitment. So an example would be, you have a Bitcoin today that you bought at 28. You're a happy seller at 35K at the end of September. You select 35K strike price. You select the end of September as your maturity date, and the amount of Bitcoin you want to participate with. So let's just say it's 1 Bitcoin. You lock up that Bitcoin, and now you have to wait till the end of September. And at the end of September, if Bitcoin is at 35K or higher, you don't get the Bitcoin back. You get the converted Bitcoin back, and you get the dollar amount that you wanted to sell at, plus the term yield. If Bitcoin does not reach that price, you get the same Bitcoin back plus your term yield. I believe we did an example a few questions back, but it's a product that lets you maximize your yield while you continue to plan for a potential purchase or sale that you would have done on your terms anyway.
Perfect, perfect. And for those who are listening, this might go over your head, but feel free to reach out to Ledn, and they'll make things really simple, and a representative will help you. So what's next for Ledn? Is there any news about to come out? Are you going to be anywhere where people could greet and meet and actually see like a module?
Definitely. So we are, I guess, in terms of upcoming products, you're going to see Ledn start supporting Tether. We've talked a lot about stablecoins, so Tether is going to come to the platform. There's a couple more things that I can't share too many details about.
Oh man, come on! You're good. You're good.
But so Tether is a big one, and in terms of where you can meet us in person, so we're going to be in Bogota at the Blockchain LATAM Summit, October 4th to 6th. I'll be there myself. We're going to be at Token 2049 in Singapore. We're going to be at Korea Blockchain Week in Seoul. I know part of the team is going to be in the UAE as well in late September. And we're going to be doing some client dinners around Europe as well. So if you want to connect with us in person, just hit us up online. We're at support@ledn.io and let us know where you're located and what our next event near your region is. And we'd love to see you. You know, we love meeting our friends and clients in person. We're very much a relationship-based company. And so we love getting to know our clients better and how we can how we can build better products for them, frankly.
Okay, and those links to their social media and the one you just said is going to be in the description down below. So make sure you hit them up and get involved, join the community. Even if you're not for sure ready to join, it wouldn't hurt to ask and get some opinions going. And yeah, man, we did pretty good. Do you feel like there's anything we didn't cover that you want to go over real quick? Or
I think we touched on a lot of stuff. If any of your viewers have questions, feel free to reach out to me directly. I'm pretty active on Twitter. You can follow us on Ledn at Hodl with Ledn. I'm at Cryptonomista on Twitter. And if you're not a subscriber, I welcome you to check out our newsletter, which I draft twice a month. That's at blog.ledn.io, and we cover markets, what's coming, what could be moving markets, what should you be watching out for as an investor.
all right, get subscribed to that newsletter. I am. Get a lot of good stuff and a lot of information that I could trust and put value in. And there's some good reads. So thanks, man. And hey, I look forward to talking to you in the future and catch up and seeing where Lennon's go, how they progress from since the last time we did a podcast. And yeah, dude, maybe we should meet up and have a cup of tea or a beer sometime if we ever meet up at an event.
Absolutely. I look forward to seeing you, Sonny.
All right, man. Take it easy and have a great day.
Cheers, you too.
Cheers.